think we always have fun jams on Bitcoin, and I think today, I wanted to talk about a post that you recently put on X, which is from the post to today, there's a month in between. And in this post, you talk about, there are now 36 million altcoins. And actually today we figured out there are 37 million altcoins. So 1 million extra in a month. I think that will enhance the points that you and I are going to make in this video. So that was actually really interesting to see. So you posted this thread on Twitter that starts with a bold claim, with over 37 million altcoins, alt season has permanently been canceled and Bitcoin has only gotten stronger. And why this stood out to me is because I really think that pump.fun killed crypto. They made a tool that makes it so easy now to create your own crypto or your coin that, everyone and their mom is making one. And that's just, diluting the market of crypto and, kind of like changing the opportunities, let's call them opportunities, right? That, the same blob of money is constantly pursuing as we've seen in crypto. And in this conversation with you, I'd love to unpack the big picture here, share what's going on, and discuss why people should focus on Bitcoin only. And before we pull up the thread, I just want to ask you, what inspired you to make this argument right now?
Yeah. So I first looked into this in 2020, and there were 7,000 altcoins. And I made a thread back then about, how there's been a proliferation of altcoins. Look, we're up to 7,000 of them now. And I guess a month or two ago, I saw this chart that I feature on the first tweet of the thread, showing an absolute explosion of altcoins since 2020. Really, since 2021, things went absolutely vertical, and now there's, as of a month ago, 36 million altcoins, and now we know 37 million altcoins a month later. And so when I saw this chart, I was compelled to revisit the point I made back then, which I think is even more true now, that, altcoins aren't scarce, fundamentally. They're abundant. And, they were abundant when there were 7,000 of them. And this trend has, grown faster than I ever imagined possible. But now there's 37 million of them, and they're even more abundant now. And when you have abundance like this, you don't have scarcity. And the incremental cost of spinning up new altcoins is clearly zero. And so what's the value of an incremental altcoin? What's the value of an altcoin when you can make a new copy for nothing? You can make 1 million copies in a month. And it's all narrative driven and meme based. Basically, there's no value. There's no scarcity, and scarcity is the thing that Bitcoin has a monopoly on in the cryptocurrency landscape. And that's what I want to call people's attention to shake people, to say, like, look, this is playing out, and you can keep chasing altcoin gains, but you're going to lose because insiders dictate what happens. Or you can choose to change your approach and put your value into the only thing here that's actually scarce, which is Bitcoin.
Yeah, I think we'll get to this in the rest of this conversation. But what I find interesting is that when you look at Bitcoin only from the technological angle, you will not get it. Right. And the technological angle could be, blockchain technology. And then, you think about, I'm going to build a startup that has blockchain technology. Right. Or you can look at, and I think that's in general the most interesting one. Right. Like you have the blockchain trilemma with speed, security, and decentralization, where, security and decentralization are focused on in Bitcoin, and the speed a bit less. I think there are great explanations about why the speed is actually just perfect. There's a talk by Jack Mallers where he actually explains like how it aligns with speed of light. It's not too fast. Solana and Ethereum, or Solana, for example, is too fast. That's why it breaks sometimes, and they have to pause it and restart it again, etc. But the point here that I want to make is when you only look at it from the technological aspect, you think that, Bitcoin is, not even Yahoo, but what came before Yahoo, it's
thieves.
Yeah, exactly. Yeah. So there is no first mover advantage. That's what people think when they only look at it from a technological aspect, right? Like, oh, there will be something better technology wise that comes along. And I think that's in general what most of crypto has ran with, right? So if you see the propositions of different crypto projects, it's this and this layers, or this speed, this much TPS, etc. And why I mentioned pump.fun is, what I know from my business background and my startup background. I always use the phrase, just because you can doesn't mean you should. Just because you can build something, just because you got funding, doesn't mean you should spend it on XYZ, or just build the thing that's in your head, basically. And what I'm seeing with pump.fun is literally that happening, right? Oh, we can build a tool that lets anyone create a token. So yeah, sure, why not? Let's do that. But that inevitably leads to what we're seeing here in this chart, which I think actually will show us some characteristics of Bitcoin that are very unique, very profound, and actually characteristics that we should focus on and that show its differences with all the cryptos that came after. And yeah, I kind of like first wanted to start with, in this chart, we see these, 37 million tokens, they're created across various blockchains like Solana, Ethereum, and others. Yet you argue this has made Bitcoin stronger. Can you explain how the exponentially growing number of altcoins has paradoxically, I'd say, strengthened Bitcoin's position?
Yeah, absolutely. So for this, I think the most empirical approach still is to look at Bitcoin dominance, which is a very flawed metric. But the idea there is to show what percent of all the value in crypto is Bitcoin. And when you line up the timelines of this explosion of altcoins with what's been happening on the Bitcoin dominance chart, which I think is the second thread tweet if you want to go to that. But the Bitcoin dominance has been rising ever since 2021 when the number of altcoins started to explode. And that's very interesting. It's like, to your point exactly, you would think that with the massive growth in the number of altcoins that Bitcoin would become a smaller player relative to everything that's out there. But the opposite has happened. And I think it comes back to like, my understanding of altcoins since arriving at Bitcoin. I used to be an altcoiner. I used to believe in the technology angle of things. And then finally the scarcity part of it really clicked for me. And Bitcoin is the invention of digital scarcity. And you can only do that once. Digital scarcity is a one-time phenomenon because you can create a copy of that system of digital scarcity, and that's an altcoin. So you have the original instance of digital scarcity, the system within which you can't make any additional supply, but you can copy the whole system. And that's what an altcoin is. And the thing about that is that you can endlessly copy that system and create an incremental altcoin. So, it's a bit of a philosophical leap, really, but any copy of digital scarcity is itself not scarce because you can create more copies of it. And so that was true at 7,000 altcoins. And, the writing was on the wall then, if you really thought about it, that the number of altcoins would keep growing, and Bitcoin would continue to be the only thing that was actually scarce. And as that trend has played out and gone, hyperbolic here, I think that is becoming more evident to the marketplace that the next altcoin is a dime a dozen, but you can't create any more Bitcoin, and that's the thing that everybody's really fighting for. So maybe that's the thing that you should actually just hold. And I think that the growth of Bitcoin dominance since 2021 shows that people are waking up collectively. The marketplace is waking up and saying, you know what, the 36 millionth altcoin doesn't do shit. Maybe I should not try to chase that and instead try to get a piece of the only thing that's actually scarce here.
Bitcoin custody is evolving, and while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering. Bitcoin is financial sovereignty, so why compromise when you need liquidity? Meet Debify, the Bitcoin-backed lending platform made by Bitcoiners for Bitcoiners. Debify connects you to institutional-grade liquidity and allows you to borrow fiat or stablecoins, all while keeping your Bitcoin 100% under your control with a non-custodial 3 out of 4 multi-sig escrow solution. Get competitive rates from a global marketplace of institutional-grade lenders with loan terms that you choose, from 1 month up to a year. There are no hidden fees and there is no rehypothecation, just pure Bitcoin-aligned lending with the highest level of transparency and security. Are you ready to unlock liquidity without ever selling a single sat? Go to debify.com/Bram, that's BRAM, to check out their current lending offers. That's debify.com/Bram.
Yeah, I think for me, this kind of shows that there are other characteristics of Bitcoin that you should be paying attention to. Actually, Bitcoin itself became more scarce or more unique because the competitors, air quotes, just increased. I think that's the core here, right? Like the number of competitors, quote unquote, increased, but the dominance kept growing. So more people are paying attention to Bitcoin, basically in a sea of growing competitors.
And I think that the growth in the number of competitors has just sort of revealed the shoddy logic of it in the first place. In 2017, you have narratives of like, is Ripple going to be, the Bitcoin for banks? Is Ethereum smart contract platform going to be like the world computer? Like there were these narratives that were kind of untested and seductive too, but then when you have 36 million of them, the incremental narrative on the next one is there's nothing. You're left with absolutely nothing to stand on, and I think that just kind of reveals that none of them ever did have a good narrative, that they were just kind of unproven as to how real or not real those narratives were. And now there's a lot of evidence that all of these altcoin narratives don't amount to anything.
I think this drives us to the point of discussing what makes Bitcoin then so unique, right? So you talk a lot about the scarcity. We're going to touch upon that. I've heard, I think it was Michael Saylor probably say something like, well, anyone can copy Bitcoin, right? Like that's the whole point. And we are seeing that here to some degree. Some people have innovative ideas and they have different approaches, etc. But at the core, they are all the same, and they focus on blockchain technology to create some sort of token. I've come to, and would love to get your thought on this actually, to the understanding that Bitcoin is the ledger first and the token second, where the system of truth first. The ledger in Bitcoin is the ultimate truth of this system, which we can call a money system, right? And the longer this exists and the larger this time chain grows, right? It's 600-700 gigabytes right now. Everything within that data is the truth for this system. And every 10 minutes, this truth gets verified and something is appended to that, right? So the truth grows and it's verified. So every 10 minutes, not only the time chain is verified to still be the truth, but also the protocol of Bitcoin is also verified every 10 minutes, right? So is the 21 million supply still enacted in the majority of this money system? Every 10 minutes, we say yes. Okay. Do we still have a consensus about the truth in the system? Every 10 minutes, we say yes, right? So the longer Bitcoin exists, the higher the trustworthiness of this truth of the ledger grows. And because the trustworthiness is upheld and verified every 10 minutes, the ledger has value, and with the that's the capital B, right? The network, Bitcoin, and the ledger, and lowercase b, Bitcoin being the token, quotes. That's where the token derives its value from, because it's backed by this truth ledger. Whereas in crypto, and the truth ledger is the base layer of a system, eventually a system for money. Whereas in crypto, you have propositions that are a network or a certain type of product or a platform that is fueled by a token, right? And the proposition that you hear a lot is, I'm going to build XYZ, this and this system, where you can use this token to do blah, blah, blah. But in crypto, it's the other way around. So they pitch the token. They don't pitch the system, right? They pitch like, that's why you should buy my token. Yeah. And I've come to the realization that this is totally flipped. And when you copy Bitcoin with the open source code that is there, you can actually do it, right? We could make Bram Jesse coin tomorrow with the exact same software that is running Bitcoin, and we can make 42 million units of our coin. But then nobody would use it because it has no provenance, right? There is no security that organically grew, right? There is no truth that can be secured and verified. So we can do that. We can still do that 30 million times more, copy Bitcoin exactly. But there is a first mover advantage to the security and the decentralization of the network. And that's why Bitcoin stands alone in that sense and cannot be copied anymore.
Completely agree. Yeah, the altcoins are always the buy the token and we will build this utopia. It's always promises, whereas Bitcoin is you buy it because the network works, and it's set in stone. You're not buying promises of any future development. You're participating in something that was basically set in stone day one in terms of the core parameters. And then you were kind of hitting on, this thread doesn't even address the sort of technical argument of it that proof of work is essential to have any sort of secure truth in a decentralized network, right? Like it all rests on that. And altcoins have a choice. They can either be proof of work or they can be some variation of proof of stake. And the problem for them is that if they choose the proof of work path, they are starting with a very small network, very small computational power, and they can get easily 51% attacked by some other hardware from maybe mining Ethereum, or maybe it's Bitcoin ASICs.
Especially also now, right? Like if you would launch that now and everyone would know, there would be lots of bad actors that would want to abuse that or kill that, right? So there's also a first mover advantage that started 16 years ago, right?
Yeah.
But that is now impossible.
Right, it's impossible. So if you're trying to get off the ground as a proof of work coin, you'll never get, like, maybe you'll fly under the radar to the point where you're, I don't know, $100 million worth, and basically you're just trusting that nobody's going to bother to attack you.
Mm-hmm.
But as soon as you become big enough, somebody has an incentive to point some of their existing Ethereum mining GPUs, or I guess who knows what hardware, to 51% attack you, short the coin, and then profit. So it's a dead end if you're going to try to do a proof of work coin. And then a proof of stake coin just doesn't provide the decentralized source of truth that is the whole point of having a ledger, and trusting your value in a cryptocurrency. So they're both non-starters.
I agree. And I think here we're touching upon different characteristics of Bitcoin that combined make it so unique. And technically it's copyable. You can copy the source code, right? But feasibly it's not. Like you cannot do that anymore. I don't know if it was you that have used these words, but there are many people that use the Immaculate Conception description. I don't know if you've used that before, but I think that is this, right? Yes.
Yeah. I like it. I don't use that phrase a ton, so but I do like that phrase. It's weird because obviously that connotes something very different, but it's true that like you had the conditions that allowed for Bitcoin to get off the ground no longer exist, meaning that like there wasn't any hardware currently mining stuff that could be pointed towards your fledgling network and attack it, right? Like that didn't exist because Bitcoin was the first one. And so Bitcoin was able to grow and scale before the available hardware for attacking existed.
Yeah.
And that is... that plus a few other factors about Bitcoin's creation make it, immaculate.
Yeah, I think before we move on to the next part of the thread, like to close this off. I mean, you were distracted by crypto. I was distracted by crypto, right? I went down the. And I've been sharing this, but I actually did a Litecoin presentation at a really big bank in like 2013 or 14 after a guy that did a Bitcoin presentation. And this was after I discovered Bitcoin and I found Litecoin. I was like, oh, Litecoin is Bitcoin 2.0. Like this is better, right? And then of course later I came across Ethereum and then did NFTs and ICOs and then like all that stuff. And I think you have to do that. You have to shitcoin before you Bitcoin. I think that's also what this video is about. I've come to the realization that crypto is kind of like this Faustian bargain. It's like, this is such a great opportunity. And of course, some people got rich with it, which is logical because this is a wild west, right? Like it was just a wild west of, I'd say, economic interest and technological advancement, and people are just messing around to figure out like what is this, which I think is a good thing. But eventually, if you didn't pay attention in the beginning, if you didn't do the work, you got distracted for some time. I got distracted for some time. Probably many people that will watch this are distracted by crypto. Like I'm gonna hold on a little bit longer, but it's actually the whole point is if you do the work on Bitcoin, and I think we'll get to more arguments why Bitcoin is so unique. You only have to do that, and then you can actually chill. whereas in crypto, it's not chill, and people are just obsessed and busy the whole time. And I think we are less busy trading and stuff like that. No, we're hodling and we are enjoying our lives, and we're trying to, philosophize and figure out like how big is this technological discovery for the world. And yeah, I don't know, like, what are your thoughts on that, on the distraction that is crypto?
Yeah. It's I think of it as like the siren song of, it's just such an inevitable temptation of you ignore Bitcoin because internet money's stupid. And then you finally learn enough about it after ignoring Bitcoin for years. And then you go, oh, wait, I want some of this, but I should have bought some earlier and I didn't. Yeah. So how can I make up ground? I'm going to find the next thing and I'm going to outperform Bitcoin. And you just so quickly jump to that temptation of, I should have had more Bitcoin, but I can get in early on new things.
Yeah.
And it's just human greed, really. And, it got me. And I think, I think this topic is interesting to you and to me because we went through altcoins. And I think, Bitcoiners who have bigger regrets about the amount of time and energy they wasted in altcoin land care more about trying to articulate what it is about Bitcoin that separates it from altcoins. Yes. Literally as an attempt to create like a penance for our mistakes, try to pay it forward.
Yeah.
And I want people to not make the mistakes that I made, because then maybe my mistakes will have counted for something,
If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
And I think eventually, I don't know how you've experienced that, but just going all in on Bitcoin, understanding that this is the best, savings technology for me, for our, generational peers, which actually eventually leads to us having less anxiety about the future, living more in the now. Like it gave us so much. I mean, we are blessed, by Bitcoin. I really feel like that. So, I think that's underlying here also, in this conversation that we want to share that with people. And I'm moving on to the next part of your thread. So here you mentioned that many altcoins don't go to zero, but they linger at lower market caps, right? Like 10K to 100K, creating an illiquid leftover market cap. So there are people holding the bag, holding these coins, right? But they are never really able to sell them because there is no liquidity. Like I said in the beginning, the blob of money has moved on to the other opportunities that are there in crypto. And you argue that this means Bitcoin is approaching effective total dominance. Can you kind of like break this down? And how should we rethink Bitcoin dominance when we account for all these zombie coins, but also, and that was a reply to the thread, account for stable coins, which are about 10%, right?
Yeah, that is, I wish I had incorporated that into this chart, because that comment was dead right, that I forgot that this view includes stable coins, which is about 10% of the market. So really there should be kind of two slices here that are, different from just Bitcoin. One being 10% of the market is stable coins, and then the other chunk being the illiquid leftovers of dead and dying projects. The Bitcoin dominance right now is just over 60%. which feels like, oh, okay, so 40% is everything else, is the thriving ecosystem of crypto more broadly. But that's not true, because a good portion of that is stable coins, 10%, and a good portion of the remainder is illiquid leftovers. And those illiquid leftovers will always be there. That's the thing, is like, when a coin dies, it no longer trades, but it still, in theory, has some value because it last traded at $100,000 total market cap. And so it gets counted as being worth $100,000, but nobody will ever get any value out of that ever again, and that stays there forever. So, how much of the market is that? I don't know, kind of anybody's guess. But when you've got 36 million coins like that, you pretty quickly get 30% of the market is illiquid leftovers. And then that would mean that the highest Bitcoin dominance could ever get, accounting for stablecoins staying at 10%, and then illiquid leftovers being, I don't know, 20%. The highest you could ever get to is 70% dominance, and we're already at 60%. So we're like pretty close to effective total dominance from that metric. And I think it's helpful to think about it in those terms, rather than, oh, crypto is 40% of the market. It's not. It's much, Ethereum and Solana and the few that are actually liquid are, I don't know, 10, 15%. And
yeah.
I just want to show this. Like, I pulled up CoinMarketCap here. Well, we have Bitcoin. We scroll down. I don't know what's happening on Stellar Lumen. Shiba Inu, 6.8 billion. Yeah. H bar. This is all like so old, right? Even Bitcoin Cash, 6.3 billion.
Right. In theory, yeah.
Yeah. BitGet, Pepe, 2.9 billion. I mean, there's.
And what market cap rank are you at now?
35. This Mantle.
So 35, the 35th largest coin is a couple billion.
Yes. Well, let's go to the billion here. 61. So there are 61 crypto coins, crypto assets that are a billion plus. Story, IP, XDC, Maker, that's very old. Like, who is using this, right? Like, has always been my argument. Like, who is using the system that these tokens fuel? There are not enough people that fuel Jupiter or Story that justifies $1 billion market cap. Even let's go to 500 billion. Ditto, Oki.
These are all speculation coins, really. Like, that's all that this market cap means, is that people are speculating that this thing is that it will in the future deliver some utopia.
Yeah, fascinating. Well, I thought that that was just interesting to show that there's just so much money flocking around still in crypto. There, I'll bring up.
And yet, it's not that much in the grand scheme. I mean, if you're saying that 60 coins are $1 billion or more in total value, and like liquidity is in question for a lot of those, I think that means that all of the remainder of that 37 million minus 60 are sub $1 billion, and I would argue that below 100 million you start to not have much liquidity. So
I agree.
The 61st biggest coin is an order of magnitude away from being questionably liquid, and then starting to count in this illiquid leftover category.
Exactly. So in the thread you show there are 3 reasons why Bitcoin is already won. I think, how you say it's a one-time phenomenon, digital scarcity, you can only invent that once. I think for me, that's what the Immaculate conception ties in with, right? When it's there, and you cannot rediscover it again. I think it was Fidelity who said, that Bitcoin is akin to the wheel or like fire. It's like it's now there, and that is basically
or it's like TCP/IP. I like the internet, the direct internet comparison, because it is more analogous. And this is a protocol. It's just a set of rules for how you can store and exchange value digitally, and you can choose to participate in it or not. And what is the internet? It's a set of rules. What's TCP/IP? It's a set of rules for how servers can exchange packets of information and make it make sense. All on a standardized approach. And so it's and then protocols. What dictates who wins in protocols? Network effects, right? So once TCP/IP gained any kind of usage, it became pretty much impossible to create your own version of the internet and then get enough people to use that it would become the protocol standard instead. Yeah,
because there were enough. That's difficult to quantify, right? There were enough people tapped in using TCP/IP that there was no other way to get into that, right?
And enough is always relative, right?
Exactly. Yeah. So I don't. Yeah, enough.
Once
to not be beaten.
Once you've got 3, I don't know, you had Stanford and Cal and UCLA connected on ARPANET using some protocol. I don't know if it was TCP/IP already at that point. I think maybe it was. If you're the 4th university who's considering joining this network of information, are you going to join the one that everybody else is using, though there's only 3? Or are you going to create your own and try to get people to join you?
Well, that's what I find interesting, because you want to conform to that, because then you're able to build on that structure and also add to that, right? Become the 4th node in that early network. And there again, I think there's a little difference with Bitcoin and crypto, where there are also so many talented developers. There's so much brain power that is focused on building in crypto, that I think they are missing the point of what we're going to talk about now. If there is a once in a lifetime, once in a species, as you say, opportunity to contribute to something, then it should be Bitcoin, right? And technically, you're probably doing very interesting things in crypto. I mean, that's the whole idea behind what I said about the startup world. If you are a technical person, you like to tinker, you like to build stuff, you like to fix your own created bugs and problems, just fuck around with the technology. But don't forget, you want someone to actually use what you are building, and I think the run up to this part has been great. And I think, you should realize that Bitcoin is the only thing to pay attention to. So if you are a technical person, Bitcoin is literally inviting you to help with this, I don't know, let's call it a revolution, but this very special discovery. And you can contribute it. You can contribute to it if you want, only if you're not distracted by crypto, right? Because eventually you want people to use it. And so in this part of the post, you share, digital scarcity is a one-time phenomenon, with Bitcoin as the pioneer and altcoins just as copies. I mean, we kind of touched upon that before. Can you explain what makes Bitcoin's scarcity so unique, and why altcoins can't replicate that? We kind of touched upon it, but I think this is the part where we can kind of drill down on that.
Yeah. Okay. So, it does get a little philosophical. Actually, before we get into that, I kind of want to add a point to what you were talking about of I think it's kind of tragic that so many crypto developers are misplacing their time and energy. And I think it's so I lived in San Francisco when I was into crypto, and when I was in that world, crypto, yeah, it was hard to imagine anything other than the crypto sort of worldview winning out. And now I see it for what it was, which is a misrecognition of what's going on. That, San Francisco, Silicon Valley has this like move fast and break things tech culture. And this, they see crypto as the same thing: move fast and break things, iterate, try things, but they're not recognizing what layer of the tech stack they're dealing with, which is kind of like the fundamental question. If you actually step back to ask yourself, okay, am I building an app on top of a protocol, or am I trying to move fast and break things with a protocol competing against other protocols that are stable and reliable?
Yes. And you would expect that the people in Silicon Valley would actually understand this. But again, I'm reiterating the point. They fall into the building trap. They fall into the builder trap. Oh, I just want to build cool stuff, which is fun. But when, you're faced with Bitcoin, you should make a different decision. Like it's a different...
Fast and break things doesn't work if you're in a protocol war. Like you have to think older. You have to not think about internet startups.
Yes.
You need to think about like ARPANET level of relatability. And what won then was just pure network effects.
Do you want to build on the base layer of value of the future?
Right.
Of the digital age of humanity? That's the invitation.
That's the right question.
Yeah. All right.
Okay, so to your philosophical question here of like, what makes it special? What makes Bitcoin scarcity special? Is I think it's really helpful to put it in the context of like global assets for all of human history. We've only ever had analog physical assets, right? And so that ranges from real estate to art to gold to shares of a company. A company is an analog thing still, and also dollars or bonds, which are promises of future dollars. These are analog assets. They exist in the real world. And in the real world, it's not possible to create a system that has a finite supply of anything. Right? You can always find more gold. You can always make more art. Yeah, Picasso's dead. Okay, there's never going to be more Picassos, but the art world could decide that this next artist is a big deal, and you are adding to the supply of valued art. You can always make more companies. You can always print more money. You can always issue more bonds. So it's never been possible to have a system where you can't make more of something. And that's because in the physical world, there's just no laws of physics that you can harness to say, all right, there's going to be no more gold.
Yes.
Then along comes Bitcoin, right? Because now you're talking about the digital landscape, where it is possible to create rules around supply and say there's only going to be so much of this in this digital landscape that I'm establishing the parameters of as part of this protocol. And boom, Bitcoin does that. You've invented digital scarcity, and you've simultaneously invented increasing scarcity because of the halvings and how Bitcoin distributes its issuance over time. And you've also invented absolute scarcity. So luckily, Satoshi made the original instance of digital scarcity have a completely finite supply, rather than like a tail emission of 1% a year forever or whatever, which he could have done.
To add a small part, to understand what is the goal of the protocol, the goal of the protocol is to stay the same.
Yes.
I think that's what people should understand, right? So the goal of the protocol is my rules are going to stay the same forever. That's what's going to increase my trustworthiness, which is going to lower my entropy, expand my order, basically.
Yeah.
And so the entire it's kind of like a reputation engine or something like that, right? It's like the older I get, the more dense my information, the more verified my information, the more trustworthy I am, the more incentivized everyone who is using me is. The more people that are using me, the more they are incentivized. The older I get, the bigger I get, to keep me the same. Because when it changes, it falls apart. Right. Yes. So the whole goal of everyone that uses and contributes to Bitcoin in a technical way and also in this way is to emphasize that this is going to stay the same forever. That's why I think we should talk about that more, because when you have like these other tokens and there are like CEOs or organizations or what's that called, like foundations. Yes, exactly. That's the word I was looking for. What are their incentives? Those are human incentives. The whole point is this is a computer protocol let loose in the world that says, please keep me the same. Absolute digital scarcity, 21 million units. That's just that's the whole underpinning in the set of protocol rules for this specific protocol.
Yep. And immutability is such an important attribute to have trust in a decentralized system. So as soon as you cross the Rubicon of allowing some leadership team to change something because it suits their interests in the short term, now you have a precedent for change, and you can never again fully trust that system won't be changed. Which is why immutability is so important, and making sure that Bitcoin's system worked from day one, the real core of it, of there will only be 21 million. This is how the supply will be distributed over time. None of that changes. None of that can ever change. And importantly, nobody has the ability to change that. And that's essential for having trust in a decentralized system.
And it's funny because also over time, the incentive to wanting to change that slowly goes away. Right? Like you can only gain value from using the Bitcoin monetary network if you adhere to its rules. If you don't want to adhere to the rules, like you cannot gain any value from it. Not value as in monetary value, but the usage value, using it as a decentralized, cross-border final settlement asset, for example.
Yeah. Ironically, the people who are interested in changing it don't count on it much. Like they're new to it. They haven't adopted it as their actual treasury asset. Because if you did, then that you don't want anybody to change it ever.
Yeah. And that's also why I agree, for example, with Saylor, who says like we should be extremely careful with changing, right? So I don't think you're a proponent of ossification, keeping it as is, but I think it is very delicate. Like Saylor says, like it's like a rocket ship.
I
you don't want
towards ossification quite a bit. I mean,
oh really? Yeah.
Just because of that, yeah. It's like yes, I think quantum will be a problem eventually.
Well, you have to fix bugs, but not build cool shit on Bitcoin. That's what I mean.
100%.
Like that is it, right? And so it's good enough, and that's also why it's so contradictive, I'd say, in the technological age. It's like, okay, this is it. Let's keep it like this.
Yeah.
That is. I think that goes against what many people feel.
The tech culture. I mean, move fast and break things is move fast and break things is right if you're dealing with like a consumer facing app. Iterate and improve, like that's what matters. But here it's a total flip. What matters is to not change.
I agree. All right. So this is the next point where you share or where you emphasize Bitcoin as the mother of all network effects, calling it the Schelling point in game theory. For people listening who might not be familiar with all of these terms, can you explain what Schelling point is and why Bitcoin fits this role? We kind of touched upon it before with the network effect, but again, I think this is the point in the thread where we can dive into it.
Yeah. So a Schelling point in game theory is what people land on, like what anybody who thinks about the problem lands on as the logical conclusion. And if you have a conclusion that everyone is going to land on because of the fact set, then that becomes the Schelling point. Everyone converges on that logical conclusion over time. And in this case, Bitcoin is that. Mm-hmm. Because there's game theory at play whenever you're choosing what network you're going to participate in, and then more importantly, what network you're going to bet on, place your value in, and expect other people to do the same. You're betting on the behavior of other people, anticipating what their action will be in the game theory of cryptocurrency adoption. And so the chart you've pulled up here shows the relative value of all the existing cryptocurrencies, roughly to scale for like the first 30, and then after that it's just dots. But I went through and made sure that these circle sizes were actually the total market cap, relative nice. Total market cap, indexed to Bitcoin. And then the thought problem is, all right, so if this is game theory, and this is a protocol game of what will become the protocol standard for digital value, and you have to consider this given the current landscape and the relative market cap of each, which protocol do you think other people will choose as the place where they're going to park their money? That's the game theory question that you have to ask yourself. And then when you've visualized the size of these networks, and the fact that one is the invention of digital scarcity, and then all the other ones are copies of that original instance of digital scarcity. And the invention of digital scarcity the one that's actually special, is 10 times bigger than anything else in terms of its area. And then you go around and ask 100 people, of all of these circles shown on this chart here, which do you think everyone else will pick with their life savings, to bet their life savings on? It's pretty obvious that that Bitcoin has this special place and has achieved a scale relative to everything else that makes it rather inevitable that it is the singular winner.
And to tie this in with the money use case, right? That there have been many and many examples in history where people gravitate towards the strongest money, right? Even now in border areas between the US and Canada, for example, right? In Canada, you can pay with US dollars on the border in a Canadian store, but then they give you Canadian dollars back, right? And I've heard the same example as in with the Caribbean dollar, you can pay in US dollar, which is a stronger currency, and then you get a Caribbean dollar in return. And I wanted to share this one. People think Bitcoin is in crypto, but Bitcoin is a different thing, and crypto is actually more in the fiat circle here, because they are all issuers, they are all centrally controlled, right? And so I think what we've been talking to up till now should hopefully show to people that Bitcoin is a thing that stands alone, right? It's a network that stands alone. It's truly decentralized. The whole concept is decentralized. The open source software, in that sense, is also decentralized. So it's a headless computer protocol for money that was just released into the world that anyone can basically adopt, contribute to. And with what you just mentioned, with the network effect, it grows, it grows, and it's basically, yeah, you cannot catch up to it anymore, right? There is no better fire, and because people see a certain, let's say, business opportunity, or in general opportunity to make money, they started the whole crypto thing, but that is a fiat. That's part of the fiat system, and I think this also shows that Bitcoin is a parallel money system to the fiat money system. And I was, while you were talking, I was thinking about this. Like, this is, I think, the perfect illustration of that. All right, let's move back to the thread. The next one here. So in this part of the thread, you share your final argument, which is basically the crypto catch-22, where altcoins face a paradox. They can't compete with Bitcoin without a leadership team and a marketing budget. But that centralization makes them unable to rival Bitcoin's decentralization. Can you kind of walk us through this paradox and why it's such a fatal flaw for altcoins? And maybe to add to that, while I'm talking, I'm thinking, but people could say, like, yeah, but I can still, invest in these cryptos to maybe make money to then get Bitcoin. I think, that's all fine if people want to do that. But yeah, is that actually, an industry? Is that actually, are there actually good businesses of which you can invest in the token and then make money because they actually have a system where these tokens have value?
Yeah, I think a much more, it's always possible at the margins. I think there are certainly some earnest actors who have tricked themselves into believing that they are actually building the future on Web3 stuff. But I think that it's a much more accurate mental model on the whole to view crypto in general as a bunch of insiders trying to dupe people into making them rich. And that, whether that's the protocol founders, like, if you listen to Charles Hoskinson or even Vitalik talk about much of anything, personally, I find them to be clearly like delusional egomaniacs. And they've deluded themselves into thinking that they can create the world's digital currency. And I think that's kind of a common trait across crypto founders in general. So anyway, I think the right mental model to safely navigate crypto is to assume that it is made up of delusional people, delusional founders, or nefarious founders. People who are actively trying to trick people into thinking that their project is the next big thing just so that they can sell it. It's those types plus insiders, venture capitalists like A16Z who get an early cut at the supply of the next token, and the economics are set up for them to get rich. So they're gonna hype it up.
Yeah.
And if you start to view it with that kind of mental model, you'll see that it's all that. It's all some combination of that. And what that's left with is, what that relies on is retail being fooled, and retail buying in with their hard-earned money to these either delusional or malicious promises of future gains. And That's sick. That's really tragic. And I think people are a lot better off if they view the crypto industry that way. That sort of mental model will help people avoid falling for these scams.
Yeah, I think what I want to add here is, some people might think like, oh, this is still Bitcoin Max he's talking, but I've been in Bitcoin since 2013. I've been in I discovered Ethereum at I think $17. Litecoin at $3. I tried out all this stuff. And like I said, in the ICO times, I think I funded like 10 neobanks. They never seen the light of day, and of course, made some money along the way. But it's not it's not a sustainable industry. What I feel is that over time, people got distracted with this focus on taking a certain part of the technology stack, like blockchain technology enabled yada yada yada, or like I said, oh, this is faster and that's better. This is like the corporate application of blockchain. Whatever the pitch has been. Like I've seen many come by, and it took me actually. So I have a lot of experience in the startup world, Web 2, and at one point I was also really into this Web 3 thing, and I felt like, hey, like this is really going to be the future. Airplane tickets are going to be NFTs, and we could be trading them, and or why aren't airplane tickets NFTs? I was kind of like, oh, that should be a thing. And so that's actually when I started a startup in crypto. Like my idea was to create a market research platform where I combined my idea of more and more people are going to build in the future in crypto, combined with all the people in crypto are early adopters. So if I create a market research platform where new teams and companies can put up like bounties or say like, hey, this is my beta product, can you try it out, answer 5 questions, you earn some USDC. I thought that was a good idea, so I tried that, I built that with one of my friends. And we did that for 6 months. And I talked to over 200 entrepreneurs and teams in early stages. And in my career before, I did the same, but then with Web 2 startups. So like I know all the flaws and like traps that people get into. And after talking to that many teams and entrepreneurs, I just realized like people see this as a business opportunity, because they think that this is a new industry and that blockchain technology is the edge to everything. And I thought that to some degree along the way, I thought that too, like, okay, still like airplane tickets as NFTs sounds logical, right? Like if I can't go, I sell you the airplane ticket, then you can go on the plane, right? Like something like that. Like in some ways, you could make it make sense. But my point is, after I talked to all these teams and entrepreneurs, I just realized, no, this is again like just a big ocean of money just slushing around, funding different types of ideas and foundations and teams and entrepreneurs to see if they can make more of it, basically. And that is the fiat money game in essence. It's VC investing in general in Silicon Valley is a peak fiat money game. Crypto is like VC 2.0. It's like VC on steroids, basically, because there's actually money coming from VCs. But as you said, there's also money coming from retail that funds these teams. And then, they think like, oh, yeah, people think this is a good idea. I should spend more time and energy to build this crazy system where my token is going to have value. And it was one conversation I had with a guy who was building a Web3 social media platform. Basically like Facebook or X, you can follow people, be followed, post stuff, like, share, repost, whatever. And I was talking to him and I said like, okay, but, when you liked something or reposted something, people could earn their token, basically. And then I went through their white paper or business paper or whatever. And it showed like, oh, these early investors, they got our token for 0.000 something dollars, right? I don't even know how many tokens there were. But the whole point is that from the start, this guy, this founder, was incentivized to boost the growth right? So that's already in VC game in general, but here it was even worse. And then I asked him, like, okay, but if you are building a social media platform where the growth should come from organic value created by organic growth and organic users, right? If you post an interesting thread and I like it, and you bring me and you together, right? You know, Jesse and Bram together as Jesse, the creator of some content, and me, the person that enjoys that and likes that, you know, then there's value because you facilitated the platform, I said to this guy. But if from the beginning there is a monetary incentive for people to be active on this platform, you are blurring your judgment that you need to figure out what is actually valuable in the thing that I'm building. Because if it's only the possible, possible earnings of some random token, which is something that this founder wants, because then it seems like the value of the token goes up, you know, for his investors. I said, then this is not going anywhere, you know, because you're falsifying the usage, basically. You're not organically growing and figuring out if you provide value in the marketplace of, in this case, social media platform. And he looked at me and he said something like, yeah, but I got 5 million from this and this investor, so I'm just going to build it. And then when I hung up, I just realized, yeah, this is this whole industry. And we eventually shut down the startup. Yeah, exactly. You know, and so I wanted to share a personal story, because we are not some salty Bitcoin maxis that, you know, lost money in crypto. It's like, I've been in this, you know, and I've seen it, and I have been coming back to Bitcoin actually through this experience also in crypto, and just realizing, like, everything we talked about, this is a profound once in a lifetime discovery. And I think that is what we also can, you know, eventually wrap up this conversation with. You know, I wanted to ask you, like, what are the key takeaways that you would want the people listening to this to take away from this analysis and this conversation? Like, what's been your journey in realizing that this unique position of Bitcoin?
Yeah, you know, it's interesting because I, you know, going through altcoins, I did well, and then I massively underperformed Bitcoin. So, you know, and then those kind of offset. So I ended up more or less like where I would have been if I had just gone straight to Bitcoin, in terms of, you know, like the amount of Bitcoin that I would have had. But it caused me tremendous pain along the way. It was genuinely the worst experience of my life was, you know, 2018-19, running a crypto hedge fund, being responsible for other people's money.
That's rough.
And and having a massive drawdown, and having to like navigate that, and you know, and I think we might have talked about this before, but you know, I was like aware of other, I was sort of keeping tabs on what other crypto hedge fund managers were doing, and especially the ones that had like similar thesis to me. And there was a Stanford professor, a Stanford CS professor, that I was aware of, who was bullish, who was in this position. He was running a crypto hedge fund, and he was bullish on some of the stuff I was bullish on. And he killed himself in 2018-19. And, you know, I understand why, you know, because it was ugly. And being in that position is ugly. And lots of other people in crypto who lose it all end up killing themselves. Like this is there's a very real and very hidden human cost. I think, you know, you don't hear about it because they just stop being a part of the crypto internet sphere. But, you know, that this happens. So, you know, this is the most painful experience of my life, and a lot of people don't make it out of that, or at least that was the case in, you know, the cycle that I learned the hard lesson. So, you know, I think that the takeaway that I want people to think about is just, just using critical thinking, first principles, logic, reason, whatever you want to call it, of thinking about this as a protocol standard for value storage and transmission in digital space. And then thinking about the crypto catch-22, as I call it, of Bitcoin has a head start, a huge head start. It's a $2 trillion asset. It's everywhere. And there's a lot of very prominent proponents of it. So, from this point forward, just think about, what decisions you can make now going forward. If a crypto is going to gain ground on Bitcoin and catch up to Bitcoin and eventually beat Bitcoin and become the protocol standard for digital value storage and transmission, how is it going to do that? If it's starting out, it needs a way to have publicity and be visible. And the only way to do that is to have a marketing budget and a leadership team steering, right, to try to actively catch up to Bitcoin. But once you've done that, once you've set up your system that way, then you are no longer a decentralized protocol. You are now a company masquerading as a decentralized protocol. And you are precluded from being a legitimate contender, against Bitcoin. And, for me, it distills down to that very simple, logical, thought experiment. And if people are honest with themselves and go through that thought experiment, they'll come to the conclusion that nothing is catching Bitcoin. Just from that, that's not, let alone all the technical stuff around proof of work and proof of stake. Mm-hmm. Just that alone, nothing's catching Bitcoin. Bitcoin's already won. And then think about the opportunity in front of you. If Bitcoin has already won, it's still tiny. It's $2 trillion of a $900 trillion global asset landscape, 0.2% of the world's value. Michael Saylor has said that half the world's value is just looking for the best store of value out there. And as we've talked about, Bitcoin is the invention of absolute scarcity. There's no better store of value than that. And so in his view, and in my view, Bitcoin can become up to half of the world's value because it will continue to absorb capital that's just looking for a good store of value asset. We're starting at 0.2%. Saylor thinks that 20 years from now will be 7% of the world's assets and still growing from there. I think that's kind of what we're in for. And so, if you want to make your life better by outperforming other assets, here's the fastest horse over the next decade right in front of you. And don't miss the opportunity because you're chasing altcoins.
Yeah. I think this also ties into why people are chasing altcoins is because they are realizing that the money that they have is losing its value the whole time, right? They feel like they need to be investors, etc. I mean, we didn't even really go into this, but I think it ties into to saying it now to your explanation here and your article that I want to pull up and what we eventually also, I think, can wrap up with, people are forced to be investors because the money that they have keeps losing value at an accelerating rate. Things are getting more expensive. People need more units of money to pay for the same things. They're nihilistic about the future. They're very uncertain about the future. And so they feel like they need to do something to protect themselves. That's why I mentioned, I think crypto is a Faustian bargain in that sense. Like it feels like, this could be the new thing that you can use to, build your wealth, etc. Whereas the crazy reality is that it eventually is simpler. You just get into the better money system, the new money system that is Bitcoin. And once you are there, you can actually relax. I think that's something that we've both experienced.
You can let your life get better.
Yeah, like it's supposed to.
Yes.
Right? To tie that into, okay, and wrap up here. We talked about why altcoins are losing relevance. I think in general we kind of say, like anything outside of Bitcoin is not Bitcoin, but is also kind of dead. Like this is not the thing that you should be looking at. And so if people should be looking at Bitcoin only, focus on Bitcoin only, how big is the opportunity if people act on that information? And I'll pull up your article because I love there's an illustration there that I really like. This this is the once in a species part. But yeah, you tell about this, and then maybe give some context also in this image to see where we're at in the bigger picture of history in that sense.
Yeah, I mean, how big is the opportunity? There's a number of ways you can answer that, but like a few are: do you want to retire?
Yes.
Do you ever want to retire? Do you want to enjoy your life with financial security and be able to not work? If you want to, I think Bitcoin adopters will disproportionately be able to do that. And I think a lot of people who do not adopt Bitcoin will not be able to do that. So that's pretty big right there.
Well, that's my motivation for the podcast is, your retirement is not non-existent,
Yeah.
Yeah.
And like a different side of the same idea is Saylor's math that we just talked about is built on top of my Bitcoin full potential valuation framework. He thinks Bitcoin's going to be $13 million per coin in 20 years. And I think his logic is right. I think that's what we're heading for. And you can buy one of those for less than $100,000 a year right now, right? You can buy one Bitcoin for less than $100,000, and it's going to go to $13 million per coin in 20 years. That's the opportunity. Like you could potentially get to a whole coin now, and that's only if you do the honest work to try to understand Bitcoin soon. And that window for potentially getting to a whole coin, I think, closes for pretty much everyone in the next 5 years.
Yeah.
So that's the opportunity. And then when we zoom out to this topic that I spent the last 4 to 6 months kind of digging deep into the research on, of trying to explain in the context of like the origins of money. And shelling out is a fantastic research essay by Nick Szabo that details in great depth how humanity developed money. Mm-hmm. And we did that through seashells being valued commodities, and then
that's here, right? 142,000 years ago.
And in the course of so shelling out was written 20 years ago, and I wanted to dig into like what's the current state of all that stuff, all that anthropology, and I stumbled into some interdisciplinary findings that allowed me to put together like a potentially groundbreaking new hypothesis that fits all of this together about like why did humanity triumph over other early human species, and what makes us human. And it's kind of this combined answer of it's our capacity to appreciate and value scarce assets. In the first example, which was shells becoming a form of proto money that allowed humanity to develop sort of emergent civilization level behavior and coordination across tribes, because you had money as a way to have constructive, positive intertribal relationships. and transactions, and that like allowed for Homo sapiens sapiens to be a way more competitive early human group versus all the other existing archaic humans of Neanderthals and others that didn't have this sort of intertribal coordination. And part of the findings, the real crux of it, is that there is a mutation that happened in humanity sometime between 300,000 and 160,000 years ago that caused a protein in our neocortex that is responsible for promoting neurogenesis in the very outermost layers of the neocortex on the frontal lobe to be supercharged, to basically go into overdrive and overdevelop the circuitry in those areas. And what does that circuitry do? It's responsible for abstract thought, which is what you need to engage in symbolic behavior and like valuing scarce assets. So, my hypothesis is that mutation caused us to have this drive to and fascination with scarce assets that enabled us to develop the concept of money when other early human groups didn't have that ability. And then the concept of money allowed us to be, gave us a competitive advantage over everything and allowed for, the development of civilization to occur slowly over time. So, if that's true, if that hypothesis is directionally correct, it means that what makes us human is our fascination with scarce assets. It's part of our DNA to covet scarce assets, and it's our competitive advantage as a species to covet scarce assets. And now here comes Bitcoin, which is the perfection of scarcity, which is to say it's the perfection of that which we've been seeking for the entirety of our species' existence. And that would explain why for the last 16 years we've seen the inevitable gravitation of all humans when they learn about Bitcoin to Bitcoin, to realizing, oh shit, this thing is incredible and I want to own some of it because I value scarcity deep down. It's part of my DNA.
Yeah. Dude, I love that. I want to add two things. This little fiat blip here.
Isn't that funny when you put it in the correct time scale?
Wild. Yeah, I think what is very important for people to realize is that what they think is money, is not money, it's a currency, but what we think is money is not old, it's very young. The bigger thing I wanted to add is that once you realize that you are living at a moment in time where this is actually happening, I think the main thing I would love to share is that people should allow themselves to really integrate that we are living in that time. We are living in the time where a new, better money, where the scarcest money to ever exist, verifiably scarcest money to ever exist, is actually growing and being adopted in the world. That this is an opportunity for you to actually move into that new system and benefit from everything that emanates from that, all the principles and values that emanate from that. I don't know, it took me some time to accept that, to acknowledge or give that self to myself, right? To be, I don't want to say a believer because that's a very bad word, but to have conviction based on my own study that this is actually happening, and allowing myself to like move into that and letting go of all the dogma and the preconceptions, notions that I have from being raised in the fiat money system. I think that is actually what has helped me a lot to eventually free my mind through adopting Bitcoin. So, yeah, maybe that's a nice way to wrap up, man. I think this was great going through this. I want to thank you so much for this very insightful conversation. I hope we've been able to help people view Bitcoin and crypto differently. And I think you would agree if we would invite anyone that has questions, get in touch with us on X, or my email is also in the description. If you have any questions, I think we're both happy to help. So yeah, thanks again. This was fantastic.
Yeah. Thanks for having me. This was a fun one.
Cheers, man.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.